Hello and welcome to Commodity Champions. I'm Manisha Gupta. Well, there's less than a week to go for the union budget, and the commodity sector also has a long list of expectations. Let's start with the sugar industry, and the sector is hoping for an increase in the minimum selling price, which has been unchanged since 2019. It also wants a reduction in GST on hybrid electric vehicles and flexi-fuel vehicles. Meanwhile, the edible oil sector wants government to operationalize the national mission for the sector and also regulate the import of refined oils. Joining us now to discuss this is Atul Chaturvedi. He's Executive Chairman of Sri Renuka Sugars. Thank you for joining us, Mr. Chaturvedi. And I'll start with sugar first. And this is a sector that has been in a sweet spot for the maximum of last 1 year. Of course, since December, when we saw some curbs coming in making of ethanol, and then the street is still now waiting for the ethanol pricing. And then, of course, the exports are shut. So there have been some periods of downside as well. But when it comes to budget, and this is one time that the sector does anticipate that there would be something announced for the segment as well. What is your sense on when it comes to sugar? And then, of course, we'll talk about ethanol as well. But for sugar, what is your sense on what the sector could get?
Honestly speaking, I'm reminded of an old English saying, if wishes were horses, beggars would ride. We have a reasonably big wish list as far as the sugar sector is concerned, but how much of that the Honorable Finance Minister is going to look at it is actually $1 million question. In fact, the sugar sector got soured in the month of December when, contrary to the scenario which was existing at that point of time, the government in its wisdom actually banned the conversion of cane juice into ethanol and B-heavy into ethanol. So that put a spanner in the works as far as the sugar sector is concerned. And the end result was that we are now saddled with massive stocks of sugar. And we've been waiting for the government to release at least minimum 2 million tons of sugar for export. But that has still not come about. And the sugar, in spite of everything, the price of sugar remains where it was. And as far as the wish list for minimum selling price to be jacked up, that also seems to be not in place as of today. So our wish list would be that the minimum selling price of sugar should actually be jacked up to anywhere between 40 to 42. In fact, a study was done by the cooperative industry, and they've come up with the figure of 41.66 per kg as the current cost of producing 1 kilo of sugar. So if that be the case, then the price of sugar or minimum selling price of sugar should be jacked up to around that level. And the funny part is the FRP, or the fair remunerative price for cane, keeps going up, and it has in fact gone up from about 2,515, 2018 to about now 3,400. But still, nothing has changed as far as the MSP is concerned. So I think it's high time the government bit the bullet and increased the MSP for sugar, for sure.
Oh, yes. Coming to ethanol itself, and while, of course, converting ethanol from cane is one part of it, but for ethanol itself, the last couple of years have seen a lot of capex go in, as most mills have invested in capacity there. With the kind of moves that we've seen in the last 6 months, not very comforting, really. Are you hoping for something for this sector also?
No, I don't see any reason why the government should not open up or resigned their order of banning cane juice and B-heavy into ethanol. The government is actually buying maize-derived ethanol at about closer to about 72 rupees a litre. And I see no reason why the sugar sector should be deprived of that. And the sugar sector has also been clamoring for increasing the price of ethanol to about closer to what we are paying or the government is paying for maize ethanol. And for B-heavy, we want it to be raised up to about 66 rupees from the current 60 rupees or thereabouts level. So it's important. And the fears of inflation hitting the sugar sector, I think, are all unfounded. In fact, last time also, I think we were expecting, or at least the story was that the production is going to be 29 million tons or thereabout. but we've landed up having a production of about 32 million ton plus of sugar and another 2 or 2.5 million tons of sugar getting diverted to ethanol. So I think this year the monsoon has been reasonable, and the rain gods have been quite beneficial, or rather benign, for India. And the cane belt has got very good rain, so there's no reason why our cane production should be low. The government doesn't need to be fearing inflation as far as sugar is concerned. No reason.
Okay.
They should allow ethanol to be diverted to, cane juice to be diverted to ethanol. No reason for stopping it any further now.
Well, that's about sugar and ethanol, but you also look at edible oil, and here as well, when it comes to, duty differentials, or whether it's about GST or a direct payment to the farmers, there's just plenty that the edible oil sector also is wanting from the government, including the national mission that needs to be now on ground and running. What do you think we would see via this budget?
No, national mission has been talked about for almost now maybe 8-10 years. But somehow or the other, it has still not seen the light of the day in real terms. Some national mission efforts have been done as far as rice, palm oil is concerned. But for other oil seeds, I think nothing much has been done. So I think we expect this time round that adequate funding and a proper roadmap for the NMEO, or National Mission Oilseed, is implemented. And the other thing which I thought is important to make this a success is that you need to have a champion. Just like you're having this commodity champions, you need to have a champion for NMEO. The trouble is that one ministry, or the agriculture ministry, wants the prices to go up and the farmers to get paid better. And you've got another ministry, which is the Consumer Affairs Ministry, which insists that the consumer should be protected and the prices should be lower. So there is a bit of a disconnect between the two. So it's important that you have a champion to bridge this gap. And in fact, when this technology mission was launched way back in late 80s, you had Sam Petroda at the head, and he was able to bulldoze whatever he wanted, and he had the full confidence of the Prime Minister of that day. So I think you need somebody who has the full confidence of the Prime Minister to push it through. And to add to this, no nation can afford to have its edible oil security compromised to the extent of 60 to 65%. So I think it's high time NMEO got its due.
Oh,
so
well,
one
absolutely.
Is that.
Yes.
And you want me to note down the other wish list as well?
The duty rationalization, I'm assuming, is the second on your list.
Yeah, very much, very much. In fact, there's no reason why India should continue to pamper the Indonesian and the Malaysian refineries at the cost of the Indian refineries. In fact, our Prime Minister is on record talking about Make in India. So I think it needs to be implemented in the country as well. So my take is that the duty differential between crude oil and refined oils should be made minimum 15%. And the other thing which we think is important to protect our oilseed farmer is that the crude oil duty should be jacked up to about 20% from the current 5%.
Okay.
And refined oil duties should be jacked up to 35%. That should take care of the oilseed sector and refineries as well.
Well, yes, national mission and the duty rationalization for edible oils, and as far as sugar goes, minimum selling price, FRP, and in some sense making a formula out of it which makes the price dynamic in sense of sugar itself, one, and ethanol is the second thing there, and that is what the sugar and ethanol and the edible oil sector really seems to be looking forward to. Ms. Chaturvedi, as always, thank you so much for joining in and talking about those two very essential commodities which have been in the limelight for some time. From sugar and edible oil to paper now, and this industry's stakeholders want the government to increase the import duty on paper to create a level playing field. They also want a review of the duty-free imports under free trade agreements with the ASEAN. South Korea and Japan. Joining us now to take this discussion forward is Pawan Agarwal. He's president of the India Paper Manufacturers Association. Mr. Agarwal, hi, thank you so much for joining us. Well, let's start with the import duty itself, and that has been a bone of contention for some time now. What makes you think that the government will look at it this time around?
Good afternoon, Manisha, and good afternoon to the viewers. Yes, Manisha, first of all, let me tell you a little bit about the paper industry. This is the industry which is the highest employment generator in the country today, and it is highly capital intensive. And paper industry in India has, over the years, especially in the last 1 decade, has invested a lot in new capacity generation, in technology upgradation, as well as in meeting out the environmental norms. All those tough environmental norms that have been set in the past 1 decade. But the main challenge which is coming is through the free imports which are coming from ASEAN countries, especially Indonesia, and also from China, South Korea, and Japan. And to your surprise, if I can disclose the figures to you, in 2023-24. The total rise in imports from ASEAN countries, China, South Korea, and Japan is 34%, and this is creating a lot of issues with our domestic industry, especially the medium and small size paper mills. So we have put in strong words to the ministry, to the finance minister, in the strongest possible terms, that there is a strong need to protect the Indian paper industry. We don't have level playing field. Our scale of operations are quite low as compared to the scale of operations in these ASEAN countries. Secondly, we are short in fiber. We don't have our raw material, in abundance. Whether we talk of wood, we talk of agro, or even if it is recycled fiber, waste paper. So much so that we are importing 50% of our recycled fiber requirement from developed countries. So there is a need to look into all these FTAs which are coming for renewal in this year. So that is something we have demanded from the government in the strongest possible words.
Duty that you're looking at right now. Mr. Agarwal, what is the kind of import duty hike that you're looking at right now, the kind of representations that you've made?
Yeah, so the current duty is 10%, and we're asking for 25% duty on all imports.
Also, Mr. Agarwal, what is the kind of demand growth that India has seen in sense of paper, and how do you look at the overall paper economy within India?
So historically, paper has been growing at the rate of GDP. And in the last 1 decade, if you look at CGR, it has been more than 7%, somewhere between 7 to 7.5%. And keeping that in view, there has been a lot of new investment which came in the Indian paper industry, as I earlier mentioned. But because of these imports, I am seeing a growth going down to as low as 5%. The biggest area of concern is capacity utilization. Our capacity utilization is not more than 75 to 80% if we look at the total volume of the Indian paper industry. Out of 900 paper mills, to what our data says, is only 550 odd mills are in operation. So that's a big point of concern for Indian paper industry, looking at the kind of imports coming into India.
Mr. Agarwal, you talked to us about an easy dumping ground that India has become in sense of paper imports here. What about the quality controls? I mean, is that something that you're also looking at and expecting something on those lines from the budget?
Yes, we have been demanding the same with the government as well. Quality control orders, because you see, lot of paper is coming as stock lot into the country, and also as second quality. So there's a strong concern for IPMA that there should be a strict quality check so that there is no harm to the consumers in India. And we are also demanding to put QCO to issue QCOs for certain grades of paper being imported.
And how would you look at the various grades of paper? I mean, as you just mentioned, how much of that is getting imported? What quantity does India produce there? And what are the economics between the two?
So you see, broadly speaking, there are mainly three kinds of paper being consumed. One is the fine paper, the writing and printing paper, which is used for educational purposes, and the other one is newsprint, and the third one is packaging paper. So in India, we are seeing that packaging paper, the demand is growing and growing at a good rate, and we have got sufficient capacity to cater to that demand. And a lot of new production have come up in the last 1 decade, to cater to this growing demand of packaging paper. And we are not seeing much imports in this packaging paper category, though recently we have seen some high quality packaging board being imported. But as far as fine paper is concerned and photocopy paper is concerned, here we are seeing a lot of growth in imports. Despite the fact that there is enough domestic capacity, and mills have expanded in the last 1 decade. Coming to newsprint, again, there is a lot of domestic capacity, but again, since newsprint consumption is going down in developed countries, and as low as, the demand for newsprint in developed countries has gone down as low as 50% in last 1 decade, whereas in India it is still growing, though at a smaller rate. So we feel that there is a strong need to protect our domestic news producers also.
Oh, well, absolutely. So import duty is one thing. And of course, looking at quality control and ensuring that we have a level playing field in the country are some of the demands coming in from the paper industry there. Mr. Agarwal, thank you so much for joining us and making sense of all of that. And with that, it's time for a quick break. But don't go anywhere, because the discussion on the budget will continue on the other side. Welcome back to Commodity Champions, and the union budget is just 1 week away. What do the new age retailers want from the finance minister? Well, joining us now is Manu Patni, is MD and CEO of Epitomy Lux Labs. Manu, hi, thank you so much for joining us. Well, everybody has an ask from the finance ministry, and I'm assuming that retailers, the new age ones, also would need something in sense of an environment for them to grow. We keep talking about Make in India, and we keep talking about taking the Indian brand global. Would you think that the finance minister would be looking at this one thing this time?
Good afternoon, Manisha ji, and good afternoon to the viewers. Yes, to the specific point that you just made, absolutely and certainly hope so. There have been the right sound bites, and there have been the right communication sets from the powers to be. So, see, first of all, let us just look at the policy framework and the ecosystem that we have in front of us. We know, and it sounds almost cliched now, that over the last decade or so, the overall policy framework has been super supportive for the legacy businesses, for the new age retailers, for the startups, all alike. A lot of good work has been done already. So we see a tremendous amount of energy in the startups, businesses, up and coming. But how do we take it forward? So the idea that we hope that we can move towards is, and Shri Piyush Goyal ji also kind of mentioned this last week, that how do we create higher value add, more premium products, out of India? And I must say that there is already a credible and sizable demand which has been formed within India for the new age retailers, specifically in the discretionary consumer space. We are all enjoying the macroeconomic growth dividend. So how do we take that demand strata that we already are working with, since there is a credible size in place now? How do we take those products and services that we are already having to the global premium shelves? So if we can have a legal, a regulatory, as well as a classification framework, which allows for a higher value add, like in Indian design, Indian workmanship, more bespoke, more customized products, the artisanal India, if you can call it, of course, it would require a lot of discussion from within the relevant sectors. People, like sectoral experts, would have to weigh in. But how can we bring all of that together? Maybe government can, help us with a policy framework, because that artisanal India brand is not only going to have more and more employment generation, work towards a Make in India direction, but it is finally an idea whose time has come. Why do we only want to talk about the Parisian, the French ateliers or the Italian design houses? There is incredible demand locally already for bespoke premium products. And if the kind of retailers that we talk to, the global premium retailers, there is a tremendous inclination from their side as well to pull in all those higher order products from India and showcase it on their premium shelves. So that is the direction that we really hope, coming back to the earlier point, that we can work towards.
Oh, yes, yeah. So, Manu, I do understand that you already are working with an Epitomy program as well to ensure that you can take the Indian brands global, also scale these businesses up. How are you working on this one? What is in it for them? And what kind of support would you want from the government as you do this?
Absolutely. Manisha ji, if I were to give you a brief glimpse of the Epitomy program, so this program pulls in a lot of capabilities, funding support. If I were to just spend a moment on funding support, in the first cohort, we are looking to spend in the immediate short-term basis around 400 to 500 crore rupees to support these new age retailers. And over and above this funding support, there is a lot of deep operational capabilities that we are looking to deploy through a disintermediated technology platform, which is in a plug-and-play format for these retailers. And over and above this, there is a global market access that we are looking to provide to them. And this program is backed by large corporate houses who are globally the largest within their domain, within the B2B subsegment of luxury retail. So having all those capabilities, if you kind of put them all together in a mash, that is the Epitomy program. And it is focused towards, as you mentioned, towards the new age retailers who have done a tremendous job over the last 5 to 10 years. But how do we take what they have done already, leverage upon their existing achievements? Because if you see general consumer discretionary retail, there is no entry barrier. We need to keep on moving up the premiumization curve, keep on moving up the value chain. So this program brings all those capabilities which are required to achieve that, to create a much higher customer lifetime value for them and have a sustainable value addition for the long term. And what is it that we look from the government? We think that a support and labeling and an enablement framework for a premium artisanal India product, if we can bring in the global best practices, standardization frameworks, and have a classification mechanism, we are certainly looking at a $10 billion opportunity here. And that really works well from an employment generation perspective and taking Indian products to the global premium shelves.
Oh, well, absolutely. Well, that's taking the Indian brand global and, of course, scaling those businesses and the kind of environment that the government can create on that. Manu Patni, thank you so much for joining us with that sense. Well, those are various representations and requests and suggestions that have been made to the finance minister as she reads out that budget that we will hear in the next week. But with that, that's all the time that we have on Commodity Champions. Thank you for watching.